Thank you, everybody in the audience. Thank you for your time. Going to try to make this as brief as possible. So Silver Crown Royalties, obviously disclaimers, who knows what's going to happen basically in legalese. Why silver? Everything that Peter said, I'm borrowing a line from JJ. But the two key things for us that we really liked here, why we built this company, the preservation of purchasing power. That's what silver does. And industrial uses. There's a lot less supply nowadays than there was 10 years ago. There's a lot more demand today than there was 10 years ago. Why Silver Crown? So we built this company to fill a void in terms of investing in silver to gain silver exposure in the market. You have various types of vehicles that you can participate in, that you can purchase. We've heard from some companies here today, producers, price of metals explorers, etc. There's metal ETFs. There's other royalty companies which are focused on other metals other than silver. Well, then there's us. We're growth focused. We've generated a rate of return on our revenues over 300% in the last 3 years. Minimal cost risk. We're very well in control of our costs. Pure silver focus. We're the only pure silver company there is, and that's by design. We develop, we build all of our royalties, and we only focus on silver byproduct credits. So we'll go to a gold mine and we'll take the silver. So we don't take any other metals, and that's why we can safely say that we're the only pure silver royalty company there is. Unique structure, I'll show you that in a second. Dividend potential, we certainly have that starting second quarter of this year. Portfolio approach, risk mitigation, that's very key to us. Cash flow focus, very much like with growth focus, but the first 3 transactions that we've done were all on cash generating assets at the time. So slightly different approach to building a royalty company as opposed to, taking a basket of royalties public or something along those lines. This is a slide that I borrowed from Warren Buffett. This is his checkbox or tick boxes or what have you. So we tried to build, again, a company that's simple to understand, which I think it is. But I wanted to focus on economic moat, free cash flow, margin of safety. The economic moat, that's essentially first mover advantage in this particular space. So silver royalties, again, no one else is doing this. We're the first ones to market. In a way, this is, speaking of the DeLoreans, it's kind of like going back in time to 1982 when Franco-Nevada started doing royalties on hard rock precious metals. They focused on gold, obviously. We're focusing on silver. So it's in that vein, very similar. There's no one else that is focusing on silver today. We don't expect that to happen anytime soon because it's a lot easier to focus on other metals than it is on a secondary or tertiary byproduct. Free cash flow, we should have that starting second quarter this year. So, we've been public less than 2 years at this point. So that's not a bad achievement. Margin of safety, that's valuation. And we believe that we're still 2 to 3 times undervalued relative to peers, relative to how royalty companies trade in the space. This is where our assets are. We have 5 royalties right now. Again, we underwrote every one of them ourselves. We started off in British Columbia. We did a royalty in Brazil. We have one in Ecuador. We have one in Peru, which is our biggest contributor right now, most important one for us. And we have one in Nova Scotia as well. Between all of these various royalties, 26% rate of return. Because we create our own royalties, we can dictate terms in terms of what the returns are on each capital deployment. If we don't get the 25% return hurdle that we seek, our cost of capital, by the way, right now is about 8%, thanks to Michael Gentile that picked up a bunch of stock early in January. There was a bit of a revaluation. So we went from a cost of capital about 13, 15% down to what we estimate to be 8% today. So 25% rate of return on project by project basis is a pretty wide margin to that cost of capital. We're very comfortable with that. We could go lower, but we don't have to. If we can't get terms that are agreed upon by both parties, we simply move on to the next opportunity, of which there are 2,400 right now operating mines that have some silver production in them. So that's our target audience, if you will. But as well, there's recycling facilities, other places where silver comes from. And again, no other royalty company is talking to these types of facilities as of right now. So here are the 5 royalties that we have. Average rate of return, 26%. The latest one that we signed up, PPX, EDM, we've been working on longer, so that's why I say longer. The latest one is PPX, is 50%. Now, these numbers are all at the same price that we did the deal at. This is not at $94 silver. This is not at $70 silver. This is at $28, $29, $25 silver prices. So obviously that IRR right now is significantly higher, but we don't count on the price of silver to generate returns for our shareholders. We structure the deals to do that. I'm not going to talk about this chart, but I will talk about this one. You can see the re-rate there on the, what is that, the left side of the chart there. That's Michael Gentile coming in and validating the business proposition and our business model here. The little triangles there, that's insider buying. So we're very consistently adding to our positions as insiders in the company. We very much believe in this story. And we finally caught up in terms of valuation to comps on a trailing 12-month basis. Now, I did mention our aggressive growth rate. I'm targeting, this is not official, but I'm targeting personally to double silver ounce revenues every year. So we did 22,000 ounces last year. We should do 70,000 ounces run rate exit this year. I'd like to see 140, 150,000 ounces next year. If we were to discount just this year's ounces, we would end up with roughly 2 to 3 times the share price where we are today, or 2 to 3 times the market cap where we are today. In terms of capital structure, we have, these are a little bit old. It says 55 million market cap. It's closer to 70, 75 right now. We have 4.5 million shares outstanding, basic, fully diluted, 7 million. On a lot of them are in the money right now. $16 is the highest strike price for one of the warrants. The warrants are listed, by the way, $8.25 strike warrants are listed, $16 warrant strike listed. So that's for extra torque. A lot of people say, oh, there's not enough torque in royalty companies. Well, we listed warrants for people that want extra leverage to the underlying business. These warrants can bring in an additional $30 million. We have $6 million on the balance sheet right now. We own some of that in physical silver. We've done quite well on that. Lucky, good, either way. Bottom line, we think it is important for companies that are exposed to the precious metal space to have some of their working capital in the very metal that they have exposure to. So we do that. $30 million should give us enough runway to continue to build the company at those rates that we're targeting in terms of doubling the silver ounces in terms of revenue every year. Here are our shareholders. Most of it is retail, but Michael Gentile will count as retail. There's another person inside that retail pie that has 30% of the company overall. So between management, Michael Gentile, and retail, we can identify more than half of the shareholders with 3 phone calls. We also have Euro Pacific. We also have US Global, and outside of Euro Pacific, Peter Schiff also is a shareholder, and he did mention the stock on his show, and that was part of the reason why the stock re-rated in January on the follow-up from Michael Gentile's investment. We tried to build a company that's very investor friendly. We tried to make this a one-stop shop for precious metals investors that don't want to spend the time learning about geology, metallurgy, etc. So that's the premise here. Ultimately, we want to be a dividend-paying entity, and I would like to see a dividend paid in the second half of this year from free cash flows that we're going to generate. And obviously, silver prices being where they are, that could be a pretty interesting proposition.